Milling Through History presents the income tax. Why is it we have to pay income taxes every year by April 15th? Well, according to the Constitution, Congress is allowed to impose taxes, duties, imposts, and excises, but these need to be uniform throughout the United States. In addition, Congress can only impose direct taxes proportional to each state's census populations. As a result, this has made income taxes a very tricky subject to deal with, as the tax could be viewed as both a direct and indirect tax. For the Founding Fathers, the idea of raising revenue through taxes was something that had gone all the way back to the American Revolution, and as such, they needed to find a way to allow the government to get money while at the same time not becoming tyrannical. Prior to the 16th Amendment, the income tax had been put into effect during the Civil War, namely as a way to raise revenue to fight the conflict between the North and the South. The Revenue Act of 1861 required a 3% tax on income over anyone who was making over $800 a year. In the following year, the Revenue Act of 1862 required a 3% tax on income over $600 and a 5% tax on income over $10,000 a year. In 1894, a new income tax was imposed with the Tariff Act passed that same year. However, in 1895, the Supreme Court ruled that the government could not tax rent, interest, or dividend income as it would be considered a direct tax. In effect, the Supreme Court argued the government could not fairly impose an income tax on the nation. As such, for a brief period of time, the country did not have any form of income tax whatsoever. But this was until 1913, with the passage of the 16th Amendment, which said that this would remove the possibility of classifying income taxes as a direct tax. Instead, the tax is required to create geographical uniformity for the country. As such, for over 100 years now, we have been made to pay income taxes, namely as a way to make sure that everyone in the country is paying some type of tax. However, income taxes were incrementally raised by Congress, and then inflation began to move people into tax brackets which had previously been reserved for the wealthy. As such, tax brackets had to be also adjusted for inflation. Now, one of the primary methods of raising revenue for this country, and something which many people have argued should continue to be the primary method, was through the use of tariffs. However, with tariffs, it's been proven that it doesn't quite generate enough income to run the government, and even today is only a minority share of the revenue brought in by the federal government. Payroll taxes were added on as a source of revenue during the Great Depression in order to help pull money away right away as it was being earned in order to help fund the government. Today, 2/3 of the population now have an income tax. The remaining third pays no income taxes and gets a small subsidy from government due to child credits and the earned income tax credit. And while all of us do find ourselves wishing that the IRS did not exist, it is important to remember that even the IRS itself is not necessarily a big giant bully. Instead, IRS agents will tell you that they are here to help you, and that, contrary to popular belief, they're not there just to take all of your money away. Now be sure to click like, share, and subscribe for future episodes of Milling Through History, and be sure to leave comments below for future episode ideas.